Good evening and welcome to another episode of the Weekly Market Wrap. My name is Daniel Ang, and today, of course, is May the 11th. And this week has been pretty quiet on a relative basis. And there is only one major event in which investors focus on, which is what's happening in Geneva, Switzerland, in the talks between the United States and China. This is the first time the two sides have met since the Liberation Day, which is April the 2nd. So the other major event, of course, is the flare-up between Pakistan and India, but that has come down somewhat into the weekend. So we're going to talk a little bit about what's uh, been happening in the marketplace. And without much ado, let's get started. Now, before we get into the content itself, I'd like to acknowledge that this presentation has been sponsored by none other than IronFX, a broker with a presence in 180 countries, and it has been sponsoring my event for quite some time since last year. So this presentation is not an offer to buy or sell any kind of securities, be it FX, CFD, or any kind of margin financial products. And the trading of any kind of margin financial products to carry risk of loss, just be aware of that. And I'll be sharing with you my views of the various markets, and just be aware that those are my views and has got nothing to do with the sponsor IronFX. The presentation itself has not been vetted by any regulatory body, just so that you know. Let me see. It seems that something else is disabled. Let me take a look at it. Is the chat disabled? Let's see. If the chat is disabled, you probably would have to post your question in the Q&A. Okay, so sorry about this. I have no control over the platform. So if they are disabled the chat, then suppose we all have to put your question into the Q&A function. All right, without much ado, let's get continued with the presentation. Now we see that in FX market, we have 2 days at the beginning of the week itself in which equity markets come off a little bit after it closes on a high note the week before. And of course, on Wednesday and Thursday, the market pick up again before a markets goes into sideways markets. On Friday, ahead of this talk between the United States and China in Geneva, as they thresh out what they want, both sides. I suppose it's not a negotiation. It is basically a meetup to basically thresh out the main points. China has been very, very firm in that they will only start negotiation with the United States only if the United States remove all the tariff announced on April the 2nd. And in fact, they will say that they will only go into serious negotiation if everything revert back to pre-2018, which is before the trade war between US and China started during Trump 1.0. So the Americans on the other hand, as far as Trump is concerned, he actually said that he is prepared to lower tariff on China from 145% to 80%, as if that is going to be very helpful. China definitely does not want to negotiate on that basis, whereby they feel that the tariff has been arbitrary and has no merits. Okay, so on the performance of the other assets in terms of the currency, the dollar basically has not been doing a lot this week. We saw that it started weak, like equity markets, and then pick up in the middle of the week before it closes on a relatively soft note. So as far as the dollar is concerned, the currency market has been pretty tame. However, that being said, we see that the commodity side seems to be more volatile. Gold actually surged on Monday. It surged for 2 days in a row, gaining something like more than 5% in 2 days before it dipped into the middle of the week and then pick up again on Friday. So the market right now is just waiting. So do not get your hope too high. As far as I said earlier on, the talk between the United States and China is basically exploratory. Nobody expect them to actually come to any kind of agreement. So we will have to watch in the days going forward as far as the communique put up by both sides. Okay, Trump's already claimed that there is some progress, but I think the Chinese side has been very circumspect in the sense that they have not added to any kind of conversation as to the process, to the progress that they may or may not have made. Okay, and oil has been also very volatile this past week. We have oil going down by almost 2% before bumping up to 3.43% on Tuesday, dropping back again on midweek, and then rally again back above 3%, and then close on a high note above $61 per barrel this week. Now remember, this oil has actually been under a lot of focus because OPEC Plus has actually decided that they want to hike production, which caused oil prices to actually gap down on Monday when the market opens in Asia, but it actually rebound the following day. I did mention to watch out for the gap down and how the market closes by the end of the week. And we all saw how the market has actually rebounded very, very strongly despite opening week for the week itself. Okay, so this has been what we are basically have to contend with this past week. Now, he is going forward. How would the market will be reacting mostly on what comes out of Geneva in the next maybe 24 hours. Okay, so right now we have no official news update. Both sides say they are still continuing to talk. Although I did read from some other platform saying that the Chinese actually walk away midway on the very first day of the meeting. Not sure whether that walk away means that they are not happy with the condition that has been imposed by the United States, by representative of the United States, or anything else. But again, there is no further confirmation that they have walked out midway on Saturday. Okay, so again, this has been what hit the market because nobody expect them to talk. Okay, so in the middle of the week itself, China decided that they want to send a representative. This guy, He Fang, has been their main negotiator, and he actually went to meet them in Switzerland. Okay, it's very interesting that uh, both sides meet in Switzerland because the WTO is actually based in Geneva. Now, remember, all the nations that have gone to try to strike a deal with the United States all have gone to Washington to talk to the United States. China is the only nation that want to pick a neutral ground, okay, which is Switzerland. Okay, so this is something we may want to take a note because China believes that the rules of WTO will be the basis of their negotiation. And all the other that have gone directly to Washington to negotiate didn't quite get what they want. Okay, so we have already passed one third of the 90 days pause. Okay, so we are already beyond 30 days. So as far as United States is concerned, President Trump only has less than 60 days left to his 90-day pause. What will happen if he doesn't get more nations to negotiate with him? So far, there's only one nation which uh, 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 President Trump has claimed that he has a deal. Okay, so we will talk about it shortly after this. Now, in the middle of the week, we knew last week there was a flare-up in tension between India and Pakistan over a terrorist attack in the Indian-controlled part of Kashmir, in which 26 tourists were killed, of which 25 are Indian. And India decided that uh, Pakistan is to be blamed. So without providing evidence, I think India has started by turning off the water supply from the Indus River, and that is a declaration of war as far as Pakistan is concerned, because Pakistan is landlocked in a sense, at least in the north and the northeast. Okay, so the river is very important because it is basically very much an agricultural society. The economy do depend quite a fair bit on the water supply from the Indus River, and India decided to turn off the tap, and then without warning, they actually flooded the lower reaches of Pakistan by releasing water uh, as is as as a act of a war. Okay, so that has been the trigger in which the we saw this week itself on May the 7th, both sides started to attack each other. And dramatically, what happened was the Pakistani Air Force has actually outperformed the Indian Air Force, taking out reportedly 6 aircraft from India, including 3 of their most recent purchase from France, which is the Rafale fighter jet, which claimed to be able to outfox the American F-22. So now, apparently, Pakistan only deployed the 4.5 generation plane from China, and they have taken out a much superior aircraft in that sense. So that has actually caused India to be on a back foot. And in the days that follow, we also read news that India has actually launched wave of drones over to attack Pakistan, of which those drones are actually procured from Israel. So again, uh, there has been firefight between the two, and going into this weekend, there was a ceasefire, which is a good thing because right now both sides are trying to see if they can they can take the temperature down a few notches. Because right now it seems that if this thing continue at the current trajectory, there will be a full-scale overt war rather than a covert war. Okay, so we'll have to watch developments as they unfold. There are a couple of questions here. Let me grab them before we proceed any further. I think there are some questions. Anonymous, I'm not sure who you are. Why is gold not react to India-Pakistan war? I think gold did react. You can see that in the beginning, we we did see wild swings in gold. Gold actually went up to take out has been challenging $3,400, not quite the all-time high yet. Okay, but gold has actually reacted to the upside. They did react, but it didn't break new high. Okay, later on when we go into the gold chart, we want to see whether there is prospect of a new high uh, 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 in the offing. Okay. Here we will continue. We will talk about the trade deal between the UK and the US. Now, both the Prime Minister of UK, which is Keir Starmer, and President Donald Trump has actually claimed that this is a breakthrough in which they actually had a deal. Now, remember, they have not signed anything yet. Okay, this is subject to negotiation further. But I think both wanted to claim some kind of victory. And in terms of the significance of this so-called trade deal, it's not very, very high because the trade volume between the two of them on the comparative basis is not very, very high. The trade relationship between the US and UK is only number 8. Of course, the biggest is of course the trade with China. Okay, but a few key points here is that US has agreed to reduce the tariff on steel and aluminum on the UK, and that has been seen to be a plus. However, the minimum 10% baseline tariff remains. So not sure whether they can claim victory on that. And of course, they also lower down the tariff for automobiles import into the United States. The UK will enjoy a 10%, 10% baseline for the first 100,000 cars that has been imported into the United States. And for all intended purposes, on based on data, we have seen that every year the most that the UK sold in terms of cars to the United States is also 100,000 thereabout. So there is still the 10% tariff that the UK would have to contend with. Okay, anything above this number will be subjected to 25% tariff. Okay, so we will have to see how this is going to pan out. Not much of advantage here. The other one, of course, the UK must allow agricultural products to be imported into the UK, and that amount is 13,000 metric tons of beef. Now, the UK has a law that they will not allow any kind of hormones-induced products into their markets. So, as far as we can, as far as we can see, there's no progress there. Okay, and both hail this so-called agreement as a breakthrough. Okay, but for all intent and purpose, they have not signed anything yet. So not sure whether why they are calling this a trade deal. There's no deal just yet. Okay, so I suppose this was announced 48 hours before US meets China in Geneva. So the timing of this so-called trade deal, I suppose, is trying to show China that the US can get a deal done. Okay, and also we also knew that the EU is going to start negotiation with the United States, and I suppose UK, ever since Brexit, it is trying to get back into the EU. As far as the current UK Prime Minister is concerned, he is trying to get back into Europe. So by having a so-called trade deal with the United States, I think they want to use this as a template to negotiate with the EU as well as Japan. Okay, so we all knew that many countries has actually started negotiation with the United States with no agreement so far. Okay, we have Vietnam, we have Japan has actually gone to negotiate, and it seems that no agreement has been signed. Okay, now the latest that we knew hours ago was that the leaders of four European nations, uh, principally UK, France, Germany, and Poland, has issued an ultimatum to Russia to accept a 30 days unconditional ceasefire starting tomorrow. If Russia does not respond, then they will impose more sanctions on Russia. And President Putin has already said hours ago that he is not going to accept this ultimatum. He proposed a direct negotiation with Ukraine this week in a neutral country like in Istanbul, for example. Okay, so this is the current situation as far as the war in Ukraine is concerned. Looks like there will be no peace in my as far as I can see, because both sides are digging in, and Russia would definitely do not want to be dictated. Okay, to as to how they can end this conflict in Ukraine. So as far as economic data is concerned, we have very little. But as far as the taking a pulse on the uh, state of the economy in the US, we can see that the services PMI, which is the Purchasing Managers Index, has actually bumped up a little bit. It is definitely better than what the market was expecting. Market was expecting very, very similar to the month of March, which is 50.8, which was revised down to 50.6. The consensus was for 50.6 to be about the same. However, it bumped up to 51.6. So this has been they had this is about the only bright spot, okay? But 51.6 is not uh, a number that we can celebrate just yet. Now, remember, going into the last quarter of 2024, the number for the services PMI has all been way above 52. Okay, so now we can see that for March, it has gone down to just barely 50.6. And this 51.6 that we saw for the month of April is still subject to revision next month. Okay, it is not a great number, but it wasn't a bad number, having said that. Okay. Now, we also saw the first FOMC meeting for this month itself. Market did not expect the Fed to actually change the interest rate policy, and they did not. And what was interesting was the Fed chairman has been very outspoken. He believed that he wants to continue to monitor the data coming in, because he is very, very concerned about the impact of the tariff on inflation. We are beginning to see some kind of inflationary pressure being built up again. Going into this coming week on Tuesday, we will have the CPI numbers, and that will be something that the market will be focused on this coming week. For the surprise, there was no surprise here. Everybody was looking for the comment from the Fed chairman. Now the market do expect some kind of reaction, maybe as late as early as July at the earliest, if not in September. Okay, so next month we also have a FOMC meeting, but nobody expect the Fed to move in June. The earliest, if there's going to be one, will most likely be in July. August, there's no FOMC meeting, and then that leaves September to be the most likely month in which the Federal Reserve may or may not cut interest rates. Okay, so do not keep your hope too high. Now, as far as market reaction is concerned, we can see that this month activity is not that fantastic. We have seen a very, very sharp bounce in the US equity markets ever since President Trump announced the 90 days pause. So we can see that in the Dow itself, the market bounce of 36,600, okay, and closed at 41,000, almost 250. So that has been the market reaction. Market doesn't want to take it too far ahead. Again, everything will depend on the outcome of the talk between US and China. The rest are all sideshows because at the end of the day, the United States only won a deal with China because the relationship between the two of them is the largest in terms of the trade deficits. So the rest basically are sideshows. So if US and China cannot reach an agreement, you can expect the market to react negatively in the days ahead. So, like I said, this is not a negotiation. I think this is basically a preliminary meeting to feel each other's position. Okay, China has already made themselves very very clear that they will not accept any kind of unilateral tariff imposed on them, and they have been saying that they have to follow WTO rulings. Okay, unless the US said they are going to abandon the WTO, which the United States helped set up. Okay, so China said, I'm going to stick with the rules of the WTO, and everybody else should too. Okay, so China is taking the lead in this aspect here. As far as the S&P 500, you can see that for this week itself, there isn't a lot of movements, but it still managed to throw up a little bit, although it does end up a little bit weak going on to Friday itself. So the last traded number was 5,660 thereabout. The low was 4,835, and we can see that the bounce has been relatively sharp. When you look at the closing price, this is only crawling back less than 50% of the all-time high at 6,147.2. Now remember the S&P 500 is a very much retail-oriented index here. So retail is still waiting for some kind of update. And I think everybody's eyes is on the US-China talk, which is currently being conducted in Geneva right now. Okay, the Nasdaq, of course, on a closing basis, is already challenging the all-time high. The closing on Friday is 20,061. The highest closing, as far as we can see, was in February, 22,222. So we are not that far away from the all-time high. So the Nasdaq 100 has come a long way from where it was on April the 7th and 16,542. So the sharpest recovery has been concentrated on tech stocks, in particularly the Nasdaq 100. So this is definitely taking the lead as far as the major equity index is concerned. So if you are very, very bullish on the prospect of a deal, then maybe you want to take a look at Nasdaq 100 rather than the Dow or even the S&P 500. However, if you are bearish and thinking that nothing much will happen, which is very likely the case, then maybe you don't want to sell this index because this index is by far the strongest. Okay, perhaps you want to take a look at the Russell 2000 instead. Okay, but I don't have a chart to show you for this particular index. Just monitor it on your own. Okay. Gold did attempt to rally. Okay, we saw gold actually went up to $3,400 per ounce this week itself before pulling back into the weekend. So the highest traded so far is 3,500. That remains unchanged. That was in the third week of April, and that high remained unmolested. There's a very good chance that if there's going to be any kind of escalation, gold may be poised to take out the all-time high very, very shortly. Okay, but for all intent and purposes, I still think that in the month ahead, even if the market breaks into an all-time high, I'll be very leery to chase new highs. Okay, because from now all the way until June, I do expect the market to be consolidating rather than resume its very bullish outlook, unless of course something bad happens. Okay, in terms of geopolitics, or China decided to go home instead of continuing to talk to the United States. So we will be monitoring this, but again, personally, I will be very, very concerned about even if the market breaks new high, I am not in that situation in which I am prepared to chase because I still believe that the time will come, but not this time. Okay. Crude oil has bounced off $56.39. That was at the beginning of the month. And of course, we knew what was the catalyst. Saudi Arabia, the largest oil producer in OPEC plus, has decided to actually increase production. Now, Saudi has been very upset with two particular oil producers, namely we have Kazakhstan and Iraq. Okay, both has actually been producing beyond their quota, so Saudi wanted to punish them because in terms of the cost of production for oil, I think Saudi Arabia is one of the most cost-effective producer. I read somewhere that their average cost of production swings between $2.80 to $10 per barrel. So the latest I heard in the hours before this presentation is that the Saudi has confirmed that they can actually withstand lower prices. Now, if you imagine their cost of production is only $10 per barrel, currently when the market is at $60, even at below $50, I think they will be able to withstand this, although they may have to slow down most of their major project. Now, the Saudi does need oil to be above $90 per barrel because they have a lot of big ticket project that needs to be financed with higher oil prices. But because the other OPEC members are not keeping to their quota, and he definitely wants to express their displeasure. Now, in terms of the cost of production, other than Saudi Arabia, we also know that the other major oil producer that needs oil prices to be higher is Russia. That being the case because they have an ongoing war and the major income comes from the sales of oil and energy products. Now, for Russia, it was mentioned somewhere else. I read a report that somewhere the cost of production is somewhere between $40 to $45 when you include in the taxes and the loyalty. Okay, so $45 is about a baseline. Okay, so at the current price, Russia right now is in a situation in which they need the income. Okay, so if price of oil goes below $50, Russia will be hard pressed to withstand this much longer. Okay. Now remember, there are under sanction. Countries are not allowed to buy directly from Russia. So that means to say that if Russia is going to sell oil in the international market, regardless of where the price of oil is, they have to sell it at a discount to attract buyers. Okay, so if the oil prices go down to let's say $56 again, or something below that, Russia will be hard pressed to maintain production. Okay, that will be a long term something long term we have to watch. Now, the U.S. cost of production is actually pretty high. Okay, somewhere about $28. Okay, per barrel. So marginal oil producers may be out of luck if the price of oil continues to drop. Okay, but of course, for countries like China, they'll be delighted at the current levels of crude oil because then they can buy them cheap. Okay, so right now the market is flush with a lot of crude oil. Okay, definitely benefiting countries that do import crude oil. Now, the dollar has been going down and it has been going down this past week itself. We saw that a lot of Asian currency has actually rallied. And I get a sense that this is very much going back to 1997. Now, what happened in 1997? We have an Asian financial crisis in which Asian currencies were actually being sold, okay, led by none other than George Soros. But this time is the exact opposite. This time, it does look like a mixture of 1997 and 1985. In 1985, we have the Plaza Accord in which the Japanese yen was allowed to appreciate very, very sharply. Okay. And so we are seeing something very similar. We saw how the Taiwanese dollar has surged almost 9% at the beginning of the week itself. Singapore dollars has also broke 130 against the US dollars. We also saw the Korean won also surge. And the other thing is, of course, the Hong Kong dollar, which prompted the Hong Kong Monetary Authority, the de facto central banks in Hong Kong, to actually intervene in the market by selling the Hong Kong dollars against the US dollars. So this is has precedence. Okay, is this something that has been engineered? Okay, I suppose there is that possibility of this being engineered. You can see that President Trump has been urging the Federal Reserve to cut interest rates, and it's not happening. So President Trump has mentioned that he's like talking to a wall. So if the Federal Reserve does not cut interest rates by engineering a dollar to go down, it does have the same impact somehow. Okay, so we have read news that a lot of countries has been selling U.S. Treasury. Okay, and there's so if the dollar has been going down, okay, for those who still want to consider selling their holdings of U.S. Treasury, that will be a very painful exercise because as the dollar goes down, if you sell those Treasury bonds, when you convert back to your local currency, you get less back. Okay, so maybe this is one way to actually tackle the wholesale selling of U.S. Treasury. And the other thing, of course, is to pressure the other major trading partners of the United States by uh, by aggressively driving the dollar down relative to their currencies. We can see that this is creating a lot of problem for, let's say, country like Taiwan, for example. Taiwan has very large holdings of U.S. dollar assets, namely in U.S. treasuries, and their life insurers are actually very exposed. So what they did was very similar to a carry trade. They borrow in Taiwan dollars and take the proceed to reinvest in higher yield US assets, which is US Treasury, right? So with the dollar coming off the way it is, that means to say that the life insurers in Taiwan's they have not fully hedged against the rise, a sharp rise in the dollar. So going forward, if the dollar continue to to go down sharply. Okay, at some point there will be a crisis for all these life insurer in Taiwan. Okay, because they are relatively unhedged and not sure how much more they can take the swing in currencies. Hong Kong is the same thing. Hong Kong, the worry is the dollar against the Hong Kong dollar peg. Okay, and the they have to maintain the peg if the dollar gets too weak relatively to the Hong Kong dollar, of course, the central banks there would have to manage the exposure to keep the peg relevant. But that means it's going to be a very expensive exercise. Okay, so we will have to watch. China cannot afford the peg to break just yet. Okay, because Hong Kong is acting like a window for China, because China do not have direct foreigners do not have direct access into Chinese market, at least the capital markets. So they need Hong Kong for this purpose for the time being. So we can see there's a lot of stress in the currency market, although the dollar did not move very much against the other major currencies, but against the Asian currency, it has been quite an issue this past week. Right, let's go into the content itself. We go into the chart, but before that, let me see what is the new question that we have here. Anonymous again asking, will such a trade agreement be more beneficial for UK currencies or US currencies? Now, like I said, there is no deal between the US and UK just yet. There is nothing formal has been signed. Okay, it is still subject to the language that they're going to use if there's going to be a final agreement. Like I said, I think the sudden announcement and the timing of this announcement just ahead of the US-China talk, I suppose it's going to use as more like a crowbar, okay, to show the world that the US can get some kind of agreement. Like I said earlier on, of the 90 days pause, uh, more than 30 days has passed. So we have less than 60 days to strike a deal. Uh, that means of the 180 countries that the US need to strike a deal, there is nothing has been formally signed, despite what we have been told that the US and UK has an agreement. So will that be beneficial? Uh, like I said, the trade volume between these two countries are not even significant. Okay, so it should not impact or it should not have any impact at all, okay, other than psychological. Wayron is asking, do I think the dollar index will have a mean revision instead of a bullish reversal? I don't see a bullish reversal just yet. Okay, you can see the recovery has been in a three-wave pattern so far. That is not a very strong bounce. Okay, I suspect we may see another attempt to go down. Okay, so watch what happens in the coming days, especially if there is no solid commitment from China to want to talk to the United States. So I suspect that will be the outcome of this talk. China is very, very clear that they will not go into a serious negotiation unless the US revert back to 2018 before the trade war started. Okay, so we will have to see. It's going to take a lot for China to want to come back to the table. Okay, so what will happen if President Trump said he reduced the tariff to 88%? China cannot deal on that basis where tariff is at 80%. China will simply walk away. Okay, so there's a very good chance that these trade talks may not actually end up with anything significant. Okay, but who knows? Now let's go into the chart itself and let's take a look at the market. Okay, here we have the Dow Jones. Okay, let's take a look at the weekly time frame. This is the weekly time frame. You can see that the market has gone into some kind of a doji for the week itself. There was no follow through. There was a follow through buying, but on a close to close basis. This week the dollar closed a touch lower. No, the Dow closed a touch lower. Okay, so everything depends on the outcome of the talk because there's a lot of expectation. The fact that China is even talking to the United States was seen as a plus, but whether they can strike any kind of meaningful deal remains up in the air. Personally, I don't think anything positive will come out of this talk. Okay, so does that mean that we are going to see lower prices? We are beginning to see a bounce, especially in the Nasdaq. So maybe the Nasdaq will be giving us the answer in the days and weeks ahead. Okay, but for now, we can see that there is nothing conclusive in the chart here. We saw that rebound from 46,500 in the Dow, and the market has only clawed back maybe 50% of its drop. Okay, so you want to see how much the market has actually improved. I think it's just marginally above 50% from the low. There you have it. Okay, market is only marginally higher than the 50%, which is 40,800. So on a daily basis, nothing much is seen here as well. The market is not running away. In terms of the momentum, it has slowed down a little bit. Although on Thursday we do have one of the highest recoveries since the market bottoms out on May the 7th. Okay, so 41,785 was the high this past week, which is on Thursday, and nothing that can tell us there's going to be more that we can expect. So far, the rebound here has been unfolding in three waves. If there's going to be further gain, watch out for the bracket between 42,300 to 43,300. So this bracket of prices is where the equality is for the rebound unfolding in a three-way. So yeah, unless this rebound accelerates sharply, okay, which I do not see how it can do that because we need new impetus, right? There's no catalyst other than the CPI coming out on Tuesday. And then, of course, we have the producer price index the day after on Wednesday. So here, thereabout, we can see that the market needs a new catalyst. There isn't one readily available. So I suppose the market will uh, try to search higher prices, but look out for the bracket between 42,300 to 43,300. This bracket may see the re-emergence of selling interest. In the S&P 500, which is on the relative basis more stable than the Dow Jones, but for all intent and purposes, if you calculate from the high to the low here, okay, we are well, okay, we have gained something like 61.8%, 62%. Okay. So if this is going to be the case, let's take a look at 62%. So this is still a three-way recovery. Okay. Nothing that suggests that we are going to see a runaway just yet. 61.8% recovery from the top to the bottom, from the high of 6,150 to a low of 4,807. So the 61.8% recovery is at 5,637 thereabout. So this week, again, very similar to the Dow Jones, the market did not close with a higher close on a weekly basis. In fact, this week have a slightly marginal or weaker closing. So that we need follow through. Now, one of the key level to watch in the weekly time frame for the S&P 500, 7,000 5,791. Okay, if the market do take out this level, that could be the first technical sign that we may see higher prices. But other than that, it is still three-way recovery. If you look at the daily time frame, you can see that this is also a three-way recovery. Target is at 5,788.3, which is marginally lower than this price here, which is 5,790 point, okay, maybe 5,791. Okay, so this level is going to be crucial. Unless price goes above here, I'm still going to maintain that this pullback is we may see a more complex pattern, possibly another pullback. Okay, so this is where I think I am right now. The exception here is the Nasdaq. Okay, the Nasdaq on a weekly basis is very, very close to taking out this point of invalidation, which is 20,350. Okay, so this week itself, we have a rally attempt, but when it closes for the week, it's very similar to the S&P 500. No, very similar to the S&P 500 and the Dow. Okay, it closed as a doji. Uh, but on the daily time frame, you can see that the recovery is also three-way one to ABC. Okay, so the target is at 20,508 and a half. That means to say if that's the case, then this high here will be taken out at 20,340, 350 thereabout. Okay, if that is the case, then this market will turn decidedly positive. So the only one that can give us maybe a sign, okay, if both the S&P 500 and the Nasdaq take out the point of invalidation on the daily time frame, that will be the first conclusive sign that maybe the pullback here is over, and the market could be getting ready for some kind of a recovery back to the all-time high. Okay, technically it does have the possibility, but until it happens, okay, I am still going to watch for clues that this pullback is not over yet. Let me see if there's anything that you guys have already posted in the box here. Okay, it looks like there's no new question. Let me go into the European, okay, the European equity markets. On the weekly time frame, you can see that there was a very sharp recovery until this past week. For 4 weeks in a row, we can see that the FTSE 100 has been very, very strong, okay, but it stopped short because of, can you imagine if the UK and the US has a deal? Why is the UK equity markets not going into new high? Okay, they have a chance to take out this point of invalidation, which is 8,744. It actually closed weak, okay, uh, for the week itself. So not sure this UK-US so-called trade deal is seen to be a positive outcome. Okay, the market did not react in that manner. Okay, so we don't see it. On the daily time frame, you can see that the momentum is still very much strong. Okay, we have a very strong runner on Monday, but for the rest of the week, he has been basically closing lower. And the trade deal was announced in the middle of the week. Okay, so we can see that this reaction has not actually give us confidence that the market believe that this trade deal is worth celebrating. Okay, so again, we have to watch. This is non-conclusive. I suggest we want to keep an eye open, okay, for further movements as far as what's happening in Geneva. So whether we see the same thing in the other European index, we also now we have something very interesting. In as far as the German index is concerned, it has turned positive. There was this sharp move down to 18,813. Now this is maybe the perhaps one of the very few equity index that's actually turned positive again. In fact, this week we saw new high traded in the German DAX. The high traded here is 23,541.3, which is an all-time high. So Germany did go into a brand new high. Okay, so is it going to be something that we want to continue to monitor? I think we should. because it is not followed through by the other major equity index. So right now, the most aggressive seems to be Germany. Okay, so we want to keep an eye open whether this is going to be followed. There will be follow through buying. Okay, if not, we it could be a fake move. Okay, when we look into the Asia, take a look at the Nikkei 225. The recovery is also very sharp, but when we look into the overall scheme of things from the high to the low, it has recovered back about 62%. Okay, so not yet 62%, but it's close. So we have 5 weeks of very strong recovery, but you can see on the size of the candle bar itself, it has slowed down somewhat. Okay, the last 2 weeks has been very, very strong. This past week, not so much. Okay, but it's still close positive. Now, other than the European index, I think the Japanese index has actually done better than the US equity market, because on a close to close basis, at least they managed to register a gain, although it was not much, but it's still a positive compared to Wall Street, which most of them closed uh, lower compared to the week before. So this is the daily time frame. It is again three wave. It has hit equality at 37,457. So we want to watch if the market can gain further beyond 38,231. Then I will say yes. The Japanese market has also turned positive. Okay. We want to take a look at Hong Kong, for example. Hong Kong has actually gained, okay, from the low of 19,000, it has gone all the way back to 23,000, although it did not quite close above 23,000, but the highest traded was 23,245 in the Hang Seng on a weekly basis. So this is very interesting. One of the things that came out of the India-Pakistan war, so-called war, is that the Chinese aircraft manufacturer has seen their stock surge by 45%. Okay, so that was a market reaction to what's happening in the airspace between India and Pakistan. Okay, so it may have uh, created somewhat of a positive mood in China. So I think Hong Kong is getting a little bit of that. Of course, we all knew that it's Qingming, okay, which is a major something major in the Chinese calendar. So the market has not come back in full force just yet. Okay, so we want to watch how the market reacts when the market opens in the coming week. So in the daily time frame, we can see that so far it is also three wave. If you take this as a guide, we also have a three wave move here, which is not very, very bullish. Okay, so if this is a three-wave target about 23,412. Okay, the highest traded so far was on Wednesday at 23,245.5. Okay, but it is again something very, very close to the point of invalidation. The market can push beyond 23,881. Okay, the entire mood here will turn decidedly positive. Okay, let me see if there's any question for me. Okay, there's a couple of questions here. Let me see what they are. Hmm. Yeah. Anonymous is asking, previously I mentioned that I'm expecting something major to happen in May. Yeah, we are only not even in the middle of May just yet. Okay. There's a lot of things that can go wrong. Okay. Of course, the situation between India and Pakistan could accelerate. NATO, or at least four countries in Europe, has actually issued an ultimatum to Russia to have a ceasefire, and Russia has said no, it's not going to happen. Okay, so now that President Putin has already answered them and saying that no, he's not going to have a 30-day ceasefire. And in fact, he proposed a direct meeting with Ukraine, okay, in Istanbul to talk things over and perhaps bring an end to the war. And Russia is definitely not going to give in. And we can see then they have also beefed up the border with the Baltic state, which is Finland, Sweden. So we can see that there is the issue there. And also, of course, uh, Russia has one major weapon, which is this. Can't remember the name of the submarine, but it's the weapon that the submarine is carrying is currently. They have actually NATO have actually traced the movement of this particular submarine, which carry a missile that can travel at Mach 10. Okay, which means that it is nuclear tipped. It is something that we want to watch. Uh, Russia believe that they will come under attack very, very soon by the rest of NATO. Okay, and this thing could also turn to be a major event this month. Okay, again, going into next 2 months, May and June is going to be a very dangerous period because we have so many potential hotspots and the fire is not coming down. Okay, currently we have a bit of a pause in the Middle East, but there is the issue with Iran. Okay, Iran has been negotiating with the United States, and I think at some point the United States may lose their patience because they have been dragging the negotiation for far too long. Uh, Something could still turn back in the Middle East. Okay, now we want to know that uh, uh, there is a major military exercise in the South China Sea. Okay, a lot of things can go wrong, and I do think we have to continue to monitor all these events. Anything that is non-economics, okay, we all know that the main event is the talk between US and China, but I say do not put too much hope on that. Uh, uh, will the United States launch into something more dangerous? Okay, because China is not coming back to talk to them. Okay, so on the economic front, we have a very difficult negotiation that may still needs more positive news. Then on the geopolitics, I am very concerned about the various hotspot, okay, that can go really, really hot. So that could happen in May or June. I think May is very likely to see an event, maybe a false flag. Okay. Now the event, the trouble between India and Pakistan could be a false flag. Okay. Will this conflict turn into something more substantial? We do not know. Okay. Because India has up to now not provided any evidence that the terrorist attack on the India controlled part of Kashmir has have the fingerprints of the Pakistani. Okay, so they decided that Pakistan is guilty, and they have launched uh, an attack on them. So this could get a lot worse. Okay. Now the Japanese market considered is continuing to rise. So when you have no faith in Wall Street, you want to put your money elsewhere. Okay. So right now the Japanese market has been moving up on their own strength. Okay. There's no particular reason why the Japanese equity market is firmer than the US market, for example. Okay. Now we have seen that inflation has actually crept back up again in Japan. Okay, so will that means that the Bank of Japan will actually act to tame the inflation? I think the Japanese authority wants to see higher prices. Okay, so I think they will allow that to happen. But whether they will hike interest rates, that is something that we will want to continue to watch. Okay. Wherein is asking us, I'm showing you the Hong Kong market. Yes, I'm talking about the events that may happen in May. Okay, so yes, I'm showing you the Hong Kong market, and this is basically a reflection of what I am seeing. Okay, that the war between Pakistan and India has actually rubbed off somewhat positively on Chinese equity markets. Okay, now we have finished the equity markets. Let me see. Oh, there's another new question. Okay, I want to quickly go into the dollar index. Now, this is the dollar index. You can see on the weekly time frame, there's a bit of a recovery, but it's not strong enough to suggest that a low is finally in place. Okay, yes, the market has hit a bottom at 97.67 in the dollar index. But if you look at it from a higher perspective, there is this possibility of further losses ahead, because if we see this as a three-wave pullback, there's a possibility that the market may actually go down beyond 95 in a dollar index. Okay, so we want to see how this thing is likely to pan out. Okay, I have put a footnote here that we may see perhaps further losses ahead. Look into the third week of May. Maybe if the market did hit this level at 94.47, which is the equality move of this entire move here, 114.72 to 99.21, extrapolate from 110. The target is at 94.47. Okay, so there's still a possibility that we may see further losses ahead, because the gain in the last 3 weeks is relatively corrective. Okay, it's not strong in that sense. Here we have the daily time frame. Daily time. So here we can see that the market is basically still bearish. This is a three-wave move hitting equality. There about, you can see this bounce here, three-wave, hit equality at 100.72. The highest this week is 100.70. So technically, you can say that, okay, the market have already moved into equality. Now, from here onwards, it's going to be very vulnerable. If you use a simple way, like joining the bottom here, take over this, not doing. If the market close below this support here, it's going to resume below, possibly below this low. Okay, so there is a possibility, because we have just finished a three-wave bounce, and if the market cannot hold on to its gain and close below this support here, we probably will see further losses ahead. So that being the case, in the other currencies, especially in the euro, we should see a mirror image. Okay, here we can see that the bounce here is also three-wave, not quite equality. Equality is at 1.19 in the euro versus the dollar. So this is a larger degree bounce. We also see that in the dollar index, which is the three-wave down. Okay, so this one should correspond with the three-wave up. So if you look at it, the last 3 weeks, we see lower prices in the euro, but it's also been very contained. It is not aggressive. So because of this flush here, there is momentum to the upside. So I suspect in the coming weeks, we probably will see higher prices beyond 115.73, which is the high so far. The target is 119.18, thereabout. So that should be the basis in which we are looking at this. Okay, it's a three-wave. You can see here. Yeah. Three-wave equality. It has marginally equality and then come off. But this coming off is also three-wave. Okay, it's also three. So it's very, very corrective. So this is a minor corrective pattern on the back of this larger corrective pattern, which is within much larger move, okay, which is still bearish for the euro. Okay. So as far as sterling is concerned, sterling is by far a little bit firmer compared to the euro, but it is still three-wave. If you take this as three-wave, assuming this is going to be the pivot high, okay? But if not, then there's a possibility we may have to move this all the way here and use this as the one. That means if this is the more bullish interpretation, we possibly will see sterling going back to 151, okay? But if not, then we take the less bullish idea. That will still bring sterling to 148. So use 148 as the immediate target. Don't use the much higher bullish outlook. But by and large, we should still see continued strength in the sterling. Meaning to say that means we probably will see weaker dollar ahead. And as far as the dollar Canadian is concerned, Canadian dollar has actually gained a bit of ground, but this week itself, we saw that the dollar has gained back its strength against the Canadian dollars. By and large, the dollar is bullish against the Canadian dollar. This is the weekly time frame, by the way. Okay, you can see it's a very bullish move all the way back from 2012. Okay, so this entire pullback here is three-wave. You can see this is a three-wave move. So that means it's corrective. Is the dollar getting ready to rally? Possibly, because this week closing has been relatively strong. Okay, the closing here is the highest it has been for the last 4 weeks. 5 weeks. Okay, so this is a 5 weeks high closing. So that should actually be giving some idea that against the Canadian dollars, maybe the dollar is looking to go higher. You can see that this is a three-wave move. It hit equality at 137 half, exactly 147,499. Okay, go down by one pip. It hit equality, right? So now it followed by a bounce. So this bounce here, especially against the Canadian dollar, we may see some more gain in the dollar versus the Canadian dollars. So if you look at it from the 4 hours time frame, you can see that this is possibly building up to be something substantial. If I use this as the basis, as I say, that this market has a potential to go even higher, at least the immediate target should be somewhere. Let me put it to the. This is for the near-term outlook, 4 hours time frame. We should see maybe 140, okay, 139.60, okay, which is very, very close. So if the market extend beyond 139.60, for example, that means there's a potential. This is the beginning of what looks like a five-wave potential move, okay? So if that's the case, then there's a very good prospect that the low in the dollar Canadian may be already here, okay? Now, when we look into the other currency pair like the dollar versus the yen, okay, we don't see something similar. Okay, we still see that the dollar is still weaker against the yen. The last 3 weeks has been dollar strength. Okay, very similar to what we see in the dollar index, but overall the high here at 162 does not look complete. So over time, I still think there's a possibility market will go below 139, perhaps to 136 half. Okay, to finish this pattern here. So you can see the gain in the last 3 weeks uh, uh, has not been particularly strong. Okay, so when we look in the daily time frame, we see that yeah, the market is trying to go higher, but it doesn't have a lot of strength typically associated with a more aggressive move like what we see perhaps happening in the dollar versus Canadian. Okay, here if I do a three wave, if the market can extend all the way to 148.75, that would be a different story. Okay, that would mean the market has potentially unfolding like what we are seeing in the dollar Canadian in a potential five-way. So we need to see further gains in the dollar versus the yen. If not, it's going to be hard. Right. Let's take a look at the Aussie. Is the Aussie about to move higher? We can see overall the last 5 weeks has been very, very strong. Okay. Potentially we may see a rebound in the Aussie for time being. Okay. So if this is the case, we're looking at something like this with further gain, perhaps in the cut. Okay. So far, the last 5 weeks has been strong. Okay, although this week is up despite a high. Okay, as high as the last time we saw this move was back in December of last year. Okay, so we are seeing a 5 months high in the Aussie. So that could be a basis in which lower prices, we want to see if the market can at least trace out a three-wave move to challenge this high, for example. This high here is 69,427. So there's a possibility this high may be challenged. Okay, but we need a bit of a pullback, at least in the lower time frame, a three-way pullback, and then another extended move. Okay, so you want to watch the lower time frame for this. Is there going to be a possibility that we may see something pullback? We may be able to see, at least in the near term, a bit of a pullback. Okay, in the daily time frame, we can see that the market has turned positive. So that's a good sign. In the 4 hours, we are definitely seeing a bit of a pullback. So will this pullback unfold in a three-wave targeting maybe the 62 cents and look for some kind of entry? I think there is still further gain ahead for the Aussie. Okay, Kiwi dollars. For those who are trading the Kiwi, let me take a look at the Kiwi. Kiwi remains very much in line with what we are seeing in the Aussie. Okay. However, it is not as strong as the Aussie. The recovery in the Aussie is a lot stronger than what we are seeing in the Kiwi. So the low here is at 54 and 0.8485. So we have to see a bounce. But the Kiwi is okay as of 2 weeks ago, like not this past week. The high traded was just under 60 cents. And in terms of closing, this is uh, remember just now the Aussie at a high of since December the 8th. This one is November the 3rd. Okay. So it's on that basis, okay, it has recovered back more than 6 months of losses. Okay. So on that basis, yes, maybe it's stronger, but in terms of the structure itself, I think it is not as strong as the Kiwi, as the Aussie. Okay. Here we can see that the market is beginning to come off already. Three-wave. Okay, so this pullback may be quite limited. If you see this as a three-wave pullback, this could be very limited. For all we know, it has already finished its three-wave pullback. This is the equality move. Yeah, it has finished its three-wave. Okay, so for technical purposes, I think there is a possibility the Kiwi may start to resume its upswing. Unless this pullback here unfolds in a more complex corrective pattern, which is still possible. Okay. Right. I think that will be for currency. Let me see if there's anything that you want me to talk about before we move on to the others, like commodities. Let me get the thing back. All right. Okay, there's no new question. We'll move on to commodities. Now we want to talk about gold. Gold has been pretty strong this past week. Okay, but overall, I do not believe the correction is over, honestly. Technically speaking, I'm still looking for consolidation for this month and perhaps into the last week of May. Okay, so this could be part of the corrective pattern. Yes, there was an attempt to rally, but by the time it closes on Friday, you can see that whatever gain it had, the market has lost back 50%. Okay. So it's not a particularly strong move in a sense. So I'm leaning towards that this corrective pattern is not over. Okay. If that's the case, maybe we should see immediately a corrective pullback from where the market traded to the high. Oh, let's see this one. So if this is part of an unfolding correction that is not over yet, there's a possibility we may see 3,140 in the spot market, assuming the high here at 3,438 is the high. Okay. So if this is the case, maybe another pullback below the most recent low here at $3,202. So three wave, 3,140, that would be a much more comfortable levels to consider getting back in on the long side of this market. Here we can see that the three-wave move is not complete. Okay, so another challenge of this is actually quite a possibility. Anyway, for the lower time frame, anywhere between 3,194 to 3,260 thereabout seems to be a good level to consider. Okay, however, if we do the equality move, the low here may actually exceed. Right, equality is 3,140, like I mentioned earlier on. Okay, so it is still part of the corrective move. If you're not comfortable buying within this bracket of prices, and let's see if the market has the potential to go below $3,200 or specifically $3,193.66 in the spot market. Because if that's the case, then this will be a much comfortable level to actually anchor in, going back in to buy. Okay, perhaps I want to expand this range of prices. So between 3,140 to 3,070. Okay, is there a possibility the market can go as deep as $3,070? Never say never, right? Okay. So if that's the case, you look back in a daily time frame, does it breaks anything. It doesn't break anything. The market is still very much above $2,833. Okay, so if the market can come anywhere near 3,000, it's definitely a bargain. Okay, it's still definitely a bargain. It's still allowed. Overall, the market still remains very, very bullish on the daily time frame and definitely so on the weekly time frame. So there's no risk that the market has to really top and it's getting back down. Okay, must see this as a temporary high. Over the medium to long term, I do expect gold to rally back up again. The immediate target for gold is actually about $3,800. Okay, so that could be the immediate target if this high here is ever taken up. Silver. Silver again is not performing as well as gold. Okay, it's still underperforming. Silver hit a high of 34,086 cents and also traced out a three-wave move, hit equality at $28.34 before it bounced. Now, if gold is expected to continue to correct lower, then it would also mean that there's a possibility silver will mimic the price action in gold. Okay, so the gold silver ratio will have to top up. Right now, it's already above 100. Okay, meaning to say that it takes 100 ounces of silver to buy 1 ounce of gold. Okay, so it means that the silver has been largely underperforming relative to gold. So if the gold silver ratio continues to surge beyond, let's say, last I checked was 102. Okay, if it continue to go beyond 102, 103, 104, 105, it means that it becomes more attractive to look to accumulate silver rather than gold, especially when gold is in a corrective pattern. Okay, so it's something to watch over. Okay. So as far as the daily time frame is concerned, we can see that this market is basically still struggling. There is not much of a momentum here. Internally, we could be seeing something like this. Internally, further losses could be well ahead. Okay. And that means perhaps as low as $31. Remember, gold and silver do move in tandem, but for a time being, we do see that silver has been underperforming relative to gold. The one that we want to watch is actually crude oil. Crude oil has a very strong closing this week. Okay, not sure whether this is going to be enough. Okay, to suggest that the low is in place for oil. I do believe that we still have to monitor. For a time being, near term, maybe those who want to scalp on the long side may still want to do so. Okay, but overall, this pattern here needs something stronger. Okay, because all the lows are still getting lower. Okay, so we will have to continue to monitor this. This is a very strong closing for the week, but we need something stronger than this to actually say confidently that the low is in place at $54.76. Okay, so far it's very encouraging, at least for the time being. Even if you consider this to be part of a corrective rebound, there is scope for the market to go to $65. Okay. So where it closed right now is about $60.65 on Friday. So $65 is a good $4 and what 30 cents away. Still very, very, very meaningful. Okay. Make sure that if you ever go long, the one level to watch will be this $54.76. I suspect, okay, the low may not be in place just yet. Okay. For those who are going to look for pivotal bottom in oil market. I know there are somebody here who watch natural gas. So natural gas has performed relatively well. Okay, you can see that this is the second week in a row that it has actually closed higher on a weekly basis. And this is more durable because part of this move here does suspect is more than just three wave. This could be part of a five-wave move, especially if the market goes above $5. See, this could be part of a five-wave structure. Okay, assuming this is One, two, three, four. Then this high here may be challenged one more time. And now we have higher highs and higher lows. Okay, so natural gas technically looks good for further gain ahead. I'm not so sure about the crude oil, but I think natural gas does looks good from the technical perspective. And this is also very interesting. It pulled back in a three-wave, hit equality and bounce. Okay, so if you look at it from the weekly time frame, it does uh, give me confidence to call for higher natural oil prices, at least in the near term. I see there's a new question being posed. Jim is asking, with Europe switching to US natural gas, how will this impact natural gas price? Again, uh, one of the things that you want to watch is the cost of production in the US as far as natural gas is concerned, it's a lot higher. Okay. Uh, will Europe want to switch all their supplies to the United States? Right now, there is this trade deal, okay, that they need to strike with the United States. In the absence of a meaningful trade deal between the EU and US, it is not conclusive that the EU will want to exclusively buy from the United States. They may buy from the United States to get a deal done. Okay, so until we have a deal, okay, uh, Europe still have choices. Of course, Europe saying that they're going to phase out Russian gas by 2027. 2027 is at least 2 years away. Okay, so there is still loopholes. So the other natural gas which Europe can tap on, of course, is Qatar. Okay, whether Qatar has enough capacity to produce more, that remains to be seen. Unless Qatar said, I'm tapped out, I cannot produce more, I'm maxed out already, then maybe the European will have no choice but to buy uh, from the Americans. There's a very good chance they will have to buy from Americans if they really, really want to get some kind of trade deal going. Okay, so it's all positive, okay? Because Europe do not have a lot of choice. On the one hand, they can't go back to Qatar. Qatar could be very near or already at full capacity. They cannot buy Russian gas. It's not that they cannot buy directly from China, from Russia, okay? And that leaves them only with the United States, okay? So the last one I want to talk about will be Bitcoin. Now, Bitcoin has saw a move that is very likely soon to be challenging an all-time high. This is the monthly time frame. It does looks very vulnerable. Okay, the 109,567 looks very vulnerable. We have two solid bar here. This is for the month of April. This is for the month of May, and May is not even halfway. Okay, so based on what we see so far, it does looks like a new high is possibly on the way for Bitcoin. Okay, if you look at the daily time frame, our weekly time frame, you can see that as of now, okay, currently the market is quoting at 104,500. Just based on the closing price, it is already the highest closing price so far, assuming the market closed about current price. Okay, because the last higher close was this one, 109,567. Not that far away. Okay, not that far away. We could possibly see a new closing price. Okay, for Bitcoin. So this put Bitcoin in a good space to take out new all-time high in the days ahead. This is the daily time frame. The market never looked back. It broke this line and then it consolidated for a while and then took off. So technically speaking, we possibly will see higher prices across the entire digital space. Even Ethereum that has not been moving very well is starting to move. Okay, so by and large, there is this pivot away from treasury bonds into digital assets. Okay, this is Ethereum. Very strong move this past week. Very strong move. Okay, so it does looks good. Honestly, it does looks good. Okay, and we have very impulsive move. Any pullback, especially in a three-wave and a lower time frame, ought to be bought. Okay, if you consider this to be very impulsive, it's very, very impulsive. Okay, so any kind of pullback maybe towards this level, okay, at 2,270, thereabout, I think this, if there's going to be any kind of pullback, this will be one level to watch. Overall, I think digital space, the chart looks clean. Okay, uh, very, very bullish. Anything that you want me to talk about? Anything else? This week is going to be relatively quiet. We have CPI coming out on Tuesday, PPI coming out on Wednesday, and we're going to finish the week with the Michigan Consumer Sentiment Index. Okay. And there's one new question. Thank you very much. XRP. Okay. XRP is also beginning to move. Okay. This is XRP on the daily time frame. Not as aggressive, but if you look at the 4 hours, it is beginning to look good. Okay. The market has been consolidating within this bracket of prices. Okay. $2. And then now the market took out to $2.48. Looking good. I think the prospect is just as good. Okay. Although not as strong as Bitcoin. Bitcoin, I think if you have to pick a token to trade, I think Bitcoin is still the one. Okay. All right, guys. Thank you so very much for your evening. Oh, there's another new question. Let me see what is this. Ah, I don't have XLM on my chart here, but I have to check because I don't track the coin. All right, thank you very much, and I shall see you on next Sunday. Now, remember, for those who are in Singapore, I'm coming talk for Philip Nova, based in Singapore on the 24th. I believe that is a Saturday. Let me check. Is it Saturday? I think it's yeah, it's a Saturday. That means to say 2 weeks from now. Okay. Uh, I'll be giving a talk. It's a physical event. You're going to register with Philip Nova. Go to the website. There is a physical event, and we'll be talking about gold. I won't be the only speaker. There's another speaker for stateside, I think. Okay, so they will be talking about ETF. So I'll be giving my 2 cents worth as far as the COMEX gold is concerned. So if you are keen to know more about gold, okay, you're more than happy to register for the event and come along. Thank you very much. Bye bye.